All right, a lot to get to. Let's start off with your word of the day.
My word of the day is active, as in active management, Frank. You know, even in the wake of tariff-fueled uncertainty, there's always opportunities for active managers. You know, we were spoiled for so long with great economic data, strong earnings, momentum, all things that help the stock market go up. But now, and you've covered it perfectly all week, there's just massive uncertainty over tariffs, and we've got to figure out how do we manage it? How do we separate the emotions from the trade? And where do we go from here?
All right, I mean, answer that question for us, Kevin. So much headline risk. What do you do? Even if you're a long-term investor, I know sometimes people say they're a long-term investor, they're holding for the long term, but you do have to respond to some of this, I would think.
You do, Frank. And for us, it's about covered call writing. You know, you can't always predict what's going to happen in the markets, but you know that when there is volatility, there are ways to hedge it modestly. And this isn't about market timing or leverage or margin. Just quite simply old-fashioned covered call writing, harvesting some of that volatility to generate a little premium, to smooth out the ride and buffer a little bit of the downside. So since the since the election, we've been able to write a lot of premium, bring in a good bit of cash flow through covered call writing, while still maintaining those positions like the buy and hold investor.
All right, Kevin, we got to get through a few things. So very quickly, jobs report coming up. Estimate is for job growth month over month, 170,000. If we don't hit that mark, what are you expecting? How do you respond?
I think anything between 100 and 200 will be okay. You want it to be a little bit on the higher side. That 170, I think, would be Goldilocks numbers. Really, the thing is you don't want to see wage growth to be too high, too hot, because that's an inflationary measure. So we want it to be hot, but high, but not too hot.
All right. Jay Powell speaking after the jobs report later today afternoon. What are you expecting from him? How big of a market mover could that be? Of course, we don't know what the jobs report is going to be either.
Yeah, I think we have to wait and see what the jobs number is, but I'm expecting the chairman to be a little bit more dovish in terms of the commentary. You know, we've seen the yield on the 10-year come down a lot. The bond market has spoken, and now we kind of need the Fed to validate that. The whole world, at least in the U.S., stock market investors especially, would like to see rate cuts this year. We need to see an abatement in inflation, but any dovish comments out of the Fed talking about the potential for multiple cuts will be well received by the market.
Right. I need the elevator pitch on your pick. I'm going to just say it. It's Robinhood. Why is that your pick? Very quickly.
I know it's really quickly. It used to trade like a meme stock. It isn't. It's a legitimate company. They've got tons of AUM. They're bringing in young investors and educating them. They made an acquisition, Trade PMR, that legitimizes them. I love the name.
Got to leave it there.